In the last tax year, £6.1 billion was paid to HMRC in regards to inheritance tax receipts, £700 million higher than the previous tax year. If you're concerned with inheritance tax, keeping control over your assets whilst passing them on to loved ones and hopefully saving 40% in inheritance tax, then AIM or an inheritance tax portfolio could be right for you.
An IHT portfolio is a managed portfolio invested in companies that qualify for business relief. These could be qualifying shares in companies on the AIM index or unquoted shares in qualifying companies. Once these qualifying shares have been held for 2 years and are held at the time of death, then they are outside of your estate for inheritance tax. This means a tax saving of 40% when the assets are passed on to your loved ones. You retain control of the assets. You can cash them in at any time or even draw an income, although any funds taken from the portfolio will be back in your estate and liable to inheritance tax. The benefit of using a managed solution rather than picking assets yourself is to ensure that the shares qualify for business relief and that the holdings continue to qualify in the future. There is a strict criteria for shares to qualify for business relief. Not all shares on the AIM index qualify. An experienced portfolio manager will choose shares following a rigorous research process. If any shares no longer qualify, then they will be able to select a new holding that does qualify. IHT portfolio investments in AIM shares and unquoted shares are high risk with the potential for high volatility, so this may not suit everybody. The investments are less liquid than standard investments and may be more difficult to sell. Tax rules are subject to change. Although business relief assets qualify for inheritance tax relief after 2 years now, there is no guarantee that they will in the future.
So to summarise, AIM or an inheritance tax portfolio will allow you the control over your assets at the same time as requiring access should you need it in the future. If you hold these type of shares for the 2-year holding period, held at the time of death and still qualify for business relief, they'll be outside of your estate for inheritance tax. These type of shares come with a higher level of risk and a high level of volatility, so it's being able to be comfortable with accepting this level of risk. Portfolios are managed by an experienced fund manager. They'll use a diversified portfolio of between 20 to 40 companies depending on the amount of investment. Annually, the companies will be assessed to make sure that they're qualifying for business relief. This can be a time and cost-effective alternative to using a trust structure.